Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting on the 4-hour time frame with the bearish scenario, where we're looking for a leading diagonal to the downside in a wave A or 1, a 3-wave corrective structure in B or 2, and then continuation to the downside in a wave C or a wave 3. In this scenario, we're then looking for a wave 3 to finish, where of course we have to take the low of wave 1, which would increase probabilities for this scenario. However, we don't want this wave 3 to move below the 1-to-1 trend-based fib extension, preferably taken from the start to the end of 1 to the end of wave 2, as that would reduce the probabilities for a leading diagonal. It is, however, not an invalidation. Then we're looking for a zigzag family structure in 4 and another zigzag family structure in a wave 5. The invalidation is taking out the high of 2 at 70.6k. If we then zoom into this wave 3 to the downside, we're looking for a WXY double zigzag, where we have a finished ABC to the downside in a wave W, corrective structure in a wave X, and then a move towards the downside in a wave Y. Currently, price is ranging around the 382 to the 05 area, which is a common target area for a wave X. However, wave X can move all the way up to the 07. Once it hits the 07, taken from the start to the end of W, that is when it significantly reduces the probabilities for a double zigzag to the downside. So preferably in this scenario, wave X is not touching 69.6k and moves towards the downside into wave Y before that happens. On the lower time frame, to finish wave X at the current high that we have over here, we can count this range here as a sideways double combo WXY, zigzag in wave W, complex structure in a wave X, and then a flat structure in a wave Y, hitting the 1-to-1 trend-based fib extension target for wave Y, taking from the low to the high of W to the low of wave X. Preferably, that is the high in your WXY scenario. If you move back above this high, it will significantly reduce the probabilities for this being a WXY, and that is because of the flat in wave Y. This high over here has been made before the 2 fib time, which is taken from the start of your wave A to the end of your wave B, because the flat is A, B, C. 3, and then a 5-wave structure to the upside. Wave C preferably finishes before the 2 fib time of A plus B. If wave C is going to make another high over here after the 2 fib time, it significantly reduces the probabilities that this move to the upside is a wave C, and we have to look for other structures. Now, notably, if this is the end of your wave Y and we are looking for impulsive continuation to the downside, then we need to count a wave 1, a wave 2, and then eventually a wave 3, where wave 2 did touch the 886, generally a lower probability target for a wave 2 and a higher probability target for a wave B or a wave X. So that is something that we do keep in mind. Now, alternatively, if you do move towards the upside, we can count this range a little bit different, where we then have a 3-wave A, complex structure in a wave B, and then a bigger 5-wave C towards the upside. In this case, we have enough time because the 2 fib time here is only sitting on the 30th of May, so that is perfectly fine. And the target for your wave C, well, the first target is the target that we've hit, the 1 to the 1.236 trend-based fib extension, taken from the low to the high of A to the low of wave B in this flat structure. Your second target would be between the two 1.618s here, but as you can see, the 0.7 is there as well, and we don't want to hit that in the bearish scenario, which is then the WXY double zigzag. In the bullish scenario, however, of course, we do want to move towards the upside, hit that 69.6k level, reducing the probabilities for a double zigzag, increasing the probabilities to continue ranging or move towards the upside. Now, the bullish scenario here, if this is your low, has to be a wave 1, 2, continuation to the upside in a wave 3. In this scenario, we have a flat structure in wave 2, 3-wave A, a 3-wave B, a 5-wave C to the downside, where wave B did touch the 1.618 Fibonacci, taken from the start to the end of wave A, which is an uncommon target for wave B, so it does impact the probabilities for this to be a wave 2. What is also a little bit awkward on the lower time frames is the end of your wave C, because in this scenario we're then looking for a wave C to the downside here in a wave 1, 2, 3, 4, and this has to be a wave 5. So somewhere in here we need to count an impulsive structure, either a 5-wave impulsive move down, 1, 2, 3, 4, 5, or a diagonal. As you can see, the price action from this high to the downside is very messy, and even if we would end wave 4 over here, it is a very 3-wavy structure to the downside. Same is true if we would look from this high to the downside. It all looks very 3-wavy instead of a 5-wavy, and what we want for wave C, or to end a wave C, are 5-wave structures, the impulse or the diagonal. Nonetheless, in this scenario, preferably that is over here the low for your wave C, and this high over here is preferably not part of your wave 4, for then a wave 1, 2, 3, 4, and one more leg to the downside in a wave 5. And that is because your wave 4 is incredibly long compared to your wave 2, passing the 6-fib time taken from the start to the end of 2 to the end over here of your wave 3, significantly reducing the probabilities that what is happening here is still part of a wave 4. Therefore, if this is the low, it is your 2 over here. We look for continuation to the upside, where we then have a first impulse and then eventually looking for price to move up. Now, price preferably hits at least the minimum target, which is the 382, which it just did over here while recording at 68.2k. The common target for a wave 2, though, if we're looking for an impulse, 1, 2, 3 continuation, is between the 05 and the 786, 68k to 67.5k, taken from the low to the high, and the 886 is a very rare target for a wave 2. You do not want to hit that level. CVD divergences, we do have here some bullish CVD divergences. However, pay attention to the very low time frames. On the 3-minute time frame, we have seen bearish CVD divergences as well. So even though on the 50-minute time frame here, we can see higher low in price, much lower lows here on blue and yellow, that is a bullish CVD. On the 3-minute time frame, we have seen some bearish CVDs building as price has been moving towards the downside, notably here at the high, lower high in price, higher high on the CVD. And then also over here, if we zoom in, then you can also see here we actually had exactly the same. It's all very small, but it's all the details. Lower high on price, but look at my cursor line over here. We have a higher high on the CVD. It's minimal, but it is there. And those are the little small CVDs on a 3-minute time frame that are important to keep an eye on. What is worth noting as well is that on a 4-hour time frame, we do have bullish CVD divergences with the low at 60k here, the higher low. Also the low, by the way. So here, higher low in price, lower low on the CVD, and also here on blue, lower low on the CVD. But on the 4-hour time frame, also with the higher low here at 60.2k, higher low in price, lower low on yellow, as well as a lower low on blue. That is a bullish CVD on the 4-hour. Now, the more local CVD divergences play a greater importance, so I always like to prefer using local CVD, 50-minute, 3-minute, but it is good to keep an eye on the 4-hour CVD divergences, as of course they do play some role. If we then look at the probabilities of the different scenarios, then on the 15-minute time frame, the probabilities are higher to sooner or later see a retracement to the downside to at least hit the 382, which we have done during the video, so that is quite nice, if not lower. Based on that piece of price action here or potential range to form locally, we can further analyze the chart on the 15-minute. On the 1-hour time frame, the current low here at 67.2k has a very corrective look to it. It's very 3-wavy to the downside and not very 5-wavy to the downside on the lower time frame. It's difficult to count this impulsive, which would increase the probabilities to still take this low at some point. Now, how do probabilities change? First of all, if you take the 66k low over here, then the probabilities increase for the diagonal that we've been talking about. If price moves towards the upside and hits the 0.7 Fibonacci taken from the start to the end of this first move, that would increase the probabilities to continue ranging sideways and later towards the upside. And if a price can take the local high over here at 68.8k, the probabilities are reduced for this WXY, and your only bearish alternative would be a bigger flat in a wave A, B, and a wave C, but we got to be aware of that 0.7. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.